Well, I remember very well your first big act as Chancellor when you sold 400 metric tonnes of gold on the world's exchanges at $275 an ounce. At today's valuation, that would be $10 billion higher. But it isn't just the fact you got it wrong, because we can all get it wrong. It was the fact that you announced in advance how much you were going to sell and on what day you were going to sell it. It was an error so basic that the average A-level economics student, even in these educationally devalued times, wouldn't have done.
The UK very controversially sold half of its gold reserves in the late 1990s at what was the bottom of the market. At the time, Chancellor was Gordon Brown, and this is why this gold sale is known as Brown's bottom. If you wanted to sell at the worst possible time, this man would have looked a genius. According to the UK government's own data, the average amount that they sold this gold at was $275 per ounce. Today's price in 2025 is just over $2,790 per ounce. So we literally sold half of our gold reserves at 10% of today's market price. And what makes this so painful for the UK taxpayer is the fact that the gold price went up for 10 years straight just after we finished selling our gold. If you want to know what the gold is worth at today's price, the link in the description is to an article based on the Gold's Brown gold sale. There's a lot more in this article than you'll see in this video, but the thing that it does contain is it says how much gold we sold and what that is worth at today's live rate. The sale is very controversial. Even still, it's talked about in national newspapers. The reason why it's so controversial is because of a few reasons, actually. The timing was terrible in hindsight, but also because the UK government decided to announce the sales before the sales were made, which caused the gold price to go down before we even sold a single ounce. A lot of leading industry experts in the gold sector will tell you that the reason why Gordon Brown sold this gold was to bail out bullion banks. Let's look into this theory because it does make a lot of sense. So in the 1990s, the gold price was generally drifting lower. It was a very benign market, which made it ripe for the gold carry trade. The gold carry trade is a financial strategy where investors or institutions borrow gold at low interest rates, sell it in the market for cash, and then invest the proceeds in higher yielding assets. The strategy is profitable when the return on invested capital exceeds the cost of borrowing the gold. So with the gold carry trade, not only is there an arbitrage of interest rates, but also if the gold price goes down after you've sold it, you buy it back at a lower price. That increases or amplifies your profits. The converse of that is also true. So if the gold price goes up, and you've sold it and you owe someone that gold and the price has gone up, then you are going to make losses. And what the theory is that the gold price started to creep up, which meant that some bullion banks were at risk of being insolvent. And the government decided to sacrifice half of the UK gold reserves to bail them out. Just in case it's not clear what the gold carry trade is, let's just run a hypothetical scenario here. So I go out with £1 million and I borrow some gold at a cost of 1%. I then sell that gold into the market and I decide to buy Australian government bonds, which pay maybe 3%. There's an arbitrage in the interest rates of what I'm paying for the gold and what I'm getting on the bonds of 2%. So it's a profitable move. Let's say I liquidate the bonds. I then have to go back, buy this gold back and return it to the person I borrowed it from. If the gold price has gone down by 1%, then I bought that gold for 1 million, but I get 1% off effectively because the market price has gone down. So not only did I profit on my arbitrage trade, but I also get £10,000 back because the gold price has fallen. If the gold price would have gone up though, potentially I could have made a big loss on that depending on how high the gold price went. And what the theory is that the gold price went up enough to cause these bullion banks some serious problems. Another theory which is discussed every now and then is a political motivation behind the gold sale. Around the time of the sales, the euro was very new and there was a lot of talk, and I remember this at the time, that the newspapers were talking about the UK adopting the euro. Thankfully, we didn't. We kept the Great British Pound. Out of the proceeds of the gold sale, 40% of that was invested into euro-denominated assets. So potentially the Labour government at the time might have said, we're not going to adopt the euro, but what we are going to do in a massive international vote of confidence is we are going to sell some of our gold and invest it in your euro-denominated assets such as bonds. Whether this gold sale was to bail out bullion banks and stop a contagion in the UK financial industry, or whether it was because the Labour Party wanted a public endorsement of the euro, Auronum has looked into this, and we've looked into a lot of public records, and this is what we found out about the gold sale. The UK once had over 2,000 tonnes of gold in her reserves. Much of this was sold in Britain's part of the London gold pool in the 1960s. So the general pattern was that Great Britain was a gradual seller of gold. In the 1990s, the gold price was very benign, making it ripe for the carry trade, but also it probably felt like dead money to some institutions. I think what's important to note is, what was everyone else doing at the time? We know that Britain sold half of its gold in the late 90s, but maybe this was a trend at the time, and the UK had a common consensus with everyone else that gold was just not going anywhere, it stagnated, and there was better things to do with that money. The Swiss National Bank announced gold sales in the 90s, eventually selling 1,300 tonnes between 2000 and 2008. The Bank of Canada, which doesn't currently own any national gold reserves, they were selling through the 1990s. Dutch National Bank sold 300 tonnes of gold in 1992. The Belgian National Bank, they sold 1,000 tonnes in various tranches from the late 1980s through to the 1990s. The Austrian National Bank, they were smaller sellers in the 90s, but they were selling too. The Bank of Australia sold 167 tonnes of gold in 1997. The Swedish National Bank, they sold 43 tonnes of gold in the 90s as well. Something that analysts just can't see beyond is, why did the UK tell the world they was going to sell gold before they actually done it? Wouldn't it have been so much better to sell the gold stealthily and then announce after the fact, we've sold some gold? Because as soon as you announce that you're selling gold, it encourages front running. What is front running? Well, what this does is that when you tell the market that you're going to sell gold, it encourages people to get out ahead of you and start selling gold in the knowledge that you are going to sell. So they get to sell at a higher price, drive the price down, and that's when the big seller comes in. At the time, there was a precedence that big sellers of gold would pre-alert the market. The Swiss National Bank announced in 1997 of its quite large 1,300 tonnes sale, which didn't happen until years later. The International Monetary Fund, also known as the IMF, they also alerted the market that they're going to be periodically selling. The reason why you do the pre-alerts is liquidity. Central banks tend to deal with bars that are 400 ounces. In today's market, that is £990,000 per bar. And when you're selling 300 tonnes, that is a serious amount of capital required. Not a lot of institutions have this money, so the UK needed to pre-alert the market to make sure that anyone with that amount of capital wanting to invest in gold was ready. It seems like a really bad move, but just imagine if the UK went to an auction, wanted to sell off that amount of gold, and there were not enough buyers. That would have had a massive negative impact on the gold market, because it tells the world there's not enough buyers at this price, so the price will probably come down. Something else that is overlooked about this gold sale is the fact that when the UK alerted the market, it adopted complete transparency. So there was no speculation that the UK perhaps was going to do what Canada done and sold all of its gold reserves. We went to the market and we said, this is how much we're looking to sell and this is when. So there was no speculation about a bigger gold sale than actually took part, which might have had, again, a negative impact on the gold price. The UK government stated their reasoning for the sale was to diversify the national portfolio. At the time, the optimal portfolio analysis suggested that the total risk of Britain's portfolio would be so much better if the gold holdings was reduced to just 20% of national assets. Gold accounted for around 50% of the national reserves at the time, which was seen as just too much exposure to a single asset. The proceeds of the gold sale was invested in interest-bearing assets, 40% euro-denominated, 40% in US dollar denomination, and also 20% in Japanese yen denominated assets. The Brown's Bottom gold sale is so controversial. The timing was awful. The reasons behind it are very controversial, and that's why we've got a lot of conspiracy theories about the reason why Gordon Brown sold half of that gold. The Auronum article in the link in the description is something that will be updated through time, and it has a lot more information in it than I've managed to present in this short video. We conducted the research on Brown's Bottom in an unbiased way. I didn't want to present a certain view on the Labour Party or Gordon Brown himself. I wanted to look at everything that was going on at the time and build up a picture and say, this is what we think's happened. I think that it was a reasonable decision at a very bad time. I think if the UK had 50% of its reserves in gold and the price went down by 25%, the opposition would have said to the Labour Party, why didn't you sell? Look how much you've cost the UK. So divesting some of that position to diversify your portfolio is always a great thing, but the timing was absolutely awful.